No one expected this. Just a year ago, Florida's housing market was booming, a symbol of post-pandemic prosperity, with buyers rushing in, prices climbing sky-high, and homes selling within hours. But now, that same market is unraveling. Streets once filled with construction crews and moving trucks are quiet. Homes sit unsold for months. Prices are falling. Foreclosures are rising. And thousands of homeowners, many of whom thought they were investing in their future, now find themselves trapped in properties they can't afford, can't sell, and sometimes can't even live in. It began subtly. As interest rates rose, some buyers were priced out. Then came insurance shocks. Florida, already infamous for expensive homeowners insurance, saw premiums surge to record levels. Some insurance companies pulled out of the state entirely. Others hiked rates so aggressively that even financially stable families began to question if they could stay. And when hurricane season brought record damages, the dominoes started falling. Suddenly, that dream home near the coast became a liability. But it didn't stop there. Cities like Miami, Tampa, and Orlando began reporting spikes in property tax delinquencies and mortgage defaults. Investors who once bought up homes to rent them out as Airbnbs started to back away, spooked by new regulations, declining tourism, and increasing vacancies. The short-term rental gold rush that had once inflated entire zip codes began to deflate. And with it, so did the property values. By mid-2025, it was clear something serious was happening. Median home prices in several Florida counties had dropped by as much as 15% in just 6 months. That may sound modest, but for people who bought at the peak with minimal down payments, it was catastrophic. Homeowners found themselves underwater, owing more on their mortgages than their homes were now worth. Selling wasn't an option. Refinancing was impossible. And walking away? That meant financial ruin. Some of the hardest hit were out-of-state buyers who flocked to Florida during the pandemic, lured by sunshine, low taxes, and remote work flexibility. Many paid top dollar in bidding wars, only to discover that the state's infrastructure couldn't keep up. Water shortages, overloaded power grids, rising crime in urban areas, and climate threats weren't just background noise, they became daily realities. The dream of easy living was replaced by the stress of constant expenses and deteriorating conditions. Then came the migration reversal. Quietly at first, but then more visibly, people started leaving. Moving trucks were no longer bringing families in, they were taking them out. Data from moving companies and real estate listings revealed an uncomfortable trend. Florida wasn't gaining residents anymore. It was losing them. Many headed back north or west to states with more stable housing costs and better public services. Retirees reconsidered their plans. Families with children looked elsewhere. And each departing household left another home empty, another mortgage vulnerable, another neighborhood on the edge. Local governments are now scrambling. Tax bases are shrinking, even as demands for services, especially disaster response and infrastructure repair, are rising. Counties are raising millage rates to compensate, but that only adds pressure on remaining homeowners. In many communities, residents are caught in a vicious cycle: higher costs, lower values, and fewer resources. The Florida lifestyle that once sold itself now comes with too many asterisks, too many risks. The human cost is mounting. In suburban developments across the state, families are downsizing, declaring bankruptcy, or abandoning their homes altogether. Some neighborhoods look the same from the outside: neat lawns, pastel facades, palm trees swaying, but behind closed doors, anxiety is growing. People are stuck. They can't move. They can't sell. And they're watching their biggest investment bleed value month after month. For many, it's not just about money. It's about dignity, stability, and the fear of what comes next. And while politicians issue reassurances, and developers continue to break ground on new housing, the underlying crisis deepens. Experts warn that the state is still overbuilt in the wrong places, near flood zones, heat islands, and fragile coastlines. Meanwhile, affordable housing remains scarce. Young families and essential workers are priced out entirely. The market is bifurcating, luxury towers on one side, and a growing crisis of displacement on the other. And yet, the most alarming part is the uncertainty. No one knows how far the collapse will go. The variables, climate, economy, insurance, policy, are all volatile. If another major hurricane hits this year, the impact could be devastating. If interest rates stay high, the recovery could take a decade. If insurance markets don't stabilize, even well-off homeowners could begin to default. And if more people start leaving the state, the collapse could accelerate beyond anything Florida has seen in modern history. This isn't just a real estate story. It's a story about risk, trust, and the illusion of endless growth. For years, Florida was sold as the land of opportunity. Buy now, cash in later. But the cracks were always there. And now, as those cracks widen into chasms, the illusion is breaking. Behind the palm trees and sunsets is a housing market in freefall. And for the thousands of families now stuck in homes they can't escape, the pain is real. The losses are personal. And the future is uncertain. The psychological toll of the collapse is beginning to surface. It's no longer just about fluctuating interest rates or falling home prices. It's about the invisible weight pressing down on families who feel they made all the right decisions, and still lost. Many bought at the top of the market, not out of greed, but out of fear. Fear of being left behind, of being priced out forever. They took out large mortgages, drained savings, sometimes borrowed from family. And now, they're left with homes worth tens or even hundreds of thousands less than what they paid. That financial pressure seeps into every aspect of life. Marriages are strained, retirements postponed, children pulled out of schools as families are forced to relocate or downsize. Even renters aren't safe. As landlords struggle with their own costs, skyrocketing insurance, taxes, and maintenance, rent prices have become erratic. In some areas, they've spiked unsustainably. In others, landlords are slashing prices just to fill vacant units. But for tenants, the uncertainty creates a new kind of anxiety: unstable leases, neglected properties, and in some cases, mass evictions. In Florida cities where over half the population rents, housing instability is becoming a daily threat, and with it, rising homelessness, crowded shelters, and growing tent encampments. What's even more troubling is that the real estate slowdown is spilling into other industries. Florida's economy is tightly wound around housing, from construction and real estate to tourism and retail. When the housing market falters, job losses follow. Contractors lose work. Local businesses see fewer customers. Tax revenues dry up. In areas like Cape Coral and Port St. Lucie, which grew rapidly in recent years, development has come to a near standstill. Vacant lots and half-built homes are becoming common again, a haunting echo of the 2008 crisis that many hoped never to revisit. And still, many Floridians are clinging to hope. Some believe the market will rebound, that buyers will return, that conditions will normalize. But every new storm, every new insurance collapse, every new policy blunder chips away at that hope. Resilience, after all, has limits. Especially when it's not supported by action. And at the state level, there are few signs of meaningful intervention. Proposed reforms to housing policy are slow-moving. Infrastructure spending lags behind. Insurance solutions are stuck in political gridlock. Meanwhile, developers keep building, but not for the people who are struggling. Instead, they're targeting luxury buyers, foreign investors, and seasonal elites, gambling that prestige will shield them from the reality on the ground. But prestige doesn't stop rising seas. It doesn't halt hurricanes. And it doesn't make a collapsing housing market any less real for the people living in it every day. The long-term viability of some Florida communities is now openly being questioned. Neighborhoods near eroding coastlines, built on wetlands or floodplains, are facing a terrifying truth: they may not be livable in 10 or 15 years. Buyers are starting to pay attention. Lenders are tightening criteria. And climate risk assessments are quietly reshaping how homes are valued or devalued. Some banks are pulling back. Mortgage approvals in high-risk areas are down. Insurance companies, already cautious, are now being joined by hedge funds and institutional investors who see Florida's market not as a gold mine, but a ticking time bomb. They're exiting quietly and efficiently, while ordinary homeowners are left with properties they can't insure, can't refinance, and in many cases, can't leave. The phrase, climate mortgage trap, is no longer a theory, it's a daily reality for thousands across the state. And for the younger generation, the message is chilling. Many are watching this unfold and asking a simple question: why buy at all? Why tie your future to a place where insurance is unstable, property values fluctuate wildly, and climate risks are only getting worse? Homeownership, once seen as a cornerstone of the American dream, now feels like a gamble, especially in Florida. Some are choosing to rent indefinitely. Others are leaving entirely. The result? A demographic shift that's hard to reverse. Even retirees, once Florida's most reliable influx, are starting to reconsider. Rising costs, extreme weather, healthcare shortages, and failing infrastructure are making other states, and even other countries, more appealing. Panama, Portugal, and Mexico are seeing increased interest from American seniors. The idea of retiring in Florida, once practically automatic, is no longer the default. All the while, the collapse continues, quietly, steadily, and with growing intensity. What was once a correction has become a crisis. What was once a blip is now a trend. And what lies ahead is uncertain. Because this is still only the beginning.